Okay guys, welcome to this educative YouTube video again, and on today's video I'm going to be teaching you how to get trade using market structure point of interest, and I'm going to be breaking it down to type A kind of setup and type B kind of setup. Now if you're new to the channel, follow up so that you get more educative content like this and you understand the strategy more in depth. So what I look out for in a strategy, let me first give you a textbook example. What I look out for in a strategy is structure, point of interest, and inducement. I want to pay attention to where exactly the structure of the market is heading to. So if the structure is heading on a downtrending market, I'm looking out for trading shorts. I'm looking out for only short trades up until when we have a switch. Then I'll start looking out for long trade. This is just what you want to understand. Understand the structure. Where is the market currently heading to on that particular time frame you are trading? If it's going on a downtrend, you want to look out for trading shorts, and only if we have a switch in market structure before you start looking out for trading long as well. So structure, you need to understand the structure aspect of the strategy. Now once you understand structure, where the market is heading to, you want to now understand two things. Point of interest. Where exactly are your point of interest? Now when we say point of interest, you are also looking out for unmitigated point of interest. You are looking out for unmitigated, those fresh point of interest that hasn't been tapped. They are more likely to get tapped and flow along with you. So you are looking out for point of interest that haven't been mitigated, and I'll use this video to talk about single and breaks as well. So let's say we have a structure that is selling like this, going basically on a downtrend. In this kind of structure, I don't pay attention to flowing with this kind of structure unless we have a double break in market structure. So if the market is going down, I'll just be basically watching it. I don't really pay attention to trading it unless we have a double break in market structure. Now what do I mean by double break in market structure? Let me break it down. Let's say we have a trend that is like this: highs, lows, highs, lows, highs, lows, highs, lows, and the market starts showing weakness. From this place here, this is where we have a recent high. This is our low. Okay, this is the high. This is just a textbook example. I'm still going to come back to the real chart here. Now this is the low. Now any structure we have inside all of these zones here are single break in market structure. I don't pay attention to them. I only wait for when we have a double break in market structure. So this is a double break in market structure. Once we have a double break in market structure, I'm now interested in the trade. So this is when I'll be able to flow in with this kind of trades. This is when I'll be able to flow in. But this is just me understanding structure and looking out for flowing with the structure when we have a double break in market structure. So when we have a double break in market structure, I'm more interested in looking for a zone to flow in with the market. Now once we have this, now I now understand the structure part, then I'm now watching out for my point of interest. Where are my point of interest here? Let me show you my point of interest in this market. Now if you pay attention, what is the market doing here? We are the low, we are the high, we are the low, we are the high, we are the low, we are the high, we are the low. Where are my point of interest? This zone here is my point of interest, and this zone here as well is my point of interest. Now I'm going to be looking out for the point of interest the market will react to. So if the retracement after this break, now if the retracement just come and react from this point of interest and bounce, it means this point of interest has been mitigated, and it's even giving me an inducement. This point of interest now is no longer valid. It has been mitigated, and I now have an inducement. Very important. I now have an inducement. Now, I'll be looking out for, once the market is going back, you should use this zone as inducement and respect this fresh point of interest that hasn't been mitigated from here, and it should bounce. And you just keep flowing with it. This is one way to just flow with a current trend. Yeah, if you don't know exactly how to just flow with a current trend, this is one way to flow with a current trend. If you can watch out for this as well, you'll be able to flow with a current trend. And that's how I caught the signal that I posted on the group a few days ago. Now let me show you the type B kind of setup. This is the type A. Now the type A kind of setup is a setup that comes with, it has an inducement. It's a high, those setups that have those inducements, yeah, high probability. High probability. The second kind of setup is something like this. When we have, well, let's assume we have the market going on an uptrend. I'm still going to do that in the real life chart so easy. So we have the market going on an uptrend, just like this. Then we switch. Now this is also a point of interest here. So this is also a point of interest here. And if the market hasn't reacted from it, if it's a fresh drop, there's every likelihood the market will just come, react from this point of interest and bounce. And maybe before you go back and take it out. So, but this zone is also a point of interest that if the market is very, what is it called? If the market is very volatile here, it's just going to bounce up from this zone. And you see this type B here, it necessarily sometimes don't have that inducement vibes that you're looking out for, but it's also strong to hold a price. But mostly once you get that set up with the inducement here, it gives you a more higher chances of getting the trade right. So let's just see how I caught this trade here. I posted it, the first one, on the Telegram channel there. So if you notice what we had here, we had mini structures here. This is a 30-minute, and if you see the price chart has been going up, we had a switch in structure all the way from the zones here. So all of these things that is happening on the chart here are just single break in market structure. I don't pay attention to them until we have a double break. Do you see this is now another low? Now it's a double break. Once we now have that double break, do you see this is 1 point of interest, 2 points of interest? The first low, inducement. So the market retrace, inducement. Do you see this point of interest now is still very fresh? It hasn't been mitigated. So once the price is going back down, it's just going to use this zone as inducement, mitigate from this other point of interest, and bounce back all the way down. So that was how I caught this first entry here. Now for the second entry, if you see, it is just a point of interest, an unmitigated point of interest there. So if you see, the zone is still fresh. Immediately the market broke down, I marked out that unmitigated zone here. That's why I see that after the breakdown, the market just went, respect from that zone, and it started to bounce. Because the market is very liquid. Yeah. So this is just how I caught my last 2 trades, and I'm still on them. So do subscribe to the YouTube channel, and if you want to also get more tutorial like this, I offer a one-on-one mentorship course. You can also reach out to me for that. You can also join the Telegram group where we drop trading signals and trading insight as well. Peace out. See you on the next one.